The share price of Facebook, otherwise known as Meta Platforms, crashed on 3rd of February 2022. If you look at the chart over here, you realize that it dropped a staggering 26%. Looks like a screaming buy, correct? And today I'll share with you my thoughts, especially on why I believe the market is actually right, selling down the share price for Meta Platforms. And this share price plunge, in my opinion, is not an overreaction at all. If you see the price earnings ratio for Meta Platform, you realize that it's only at 17 times. And if we factor in the latest 2021 full year earnings, price earnings ratio is only 14 times. Super cheap, correct? Along the way, I'll be sharing with you 3 key points, and if you agree on them, smash the like button. Or you could also leave a comment in the sections if you disagree with any views that I have. So let's dive on to things. This is my first point. Facebook's business mode could be damaged. The keyword is could be because it at present moment has certain signs of being damaged, but things are always fluid. Improvements can always be made and the terrain can change. If you look at the latest 4th quarter transcript, Mark Zuckerberg mentions 2 key things. First is TikTok. The second is Metaverse, which we'll get to in a while. One is an existential threat and the other is a potential solution for the company. But everybody, including COO Sheryl Sandberg, mentions about privacy setting, and this is terrain shifting in my opinion. Let's look at some things mentioned by Mark Zuckerberg. He stated that iOS changes and new regulations in Europe have suggested a clear trend where less data is available to deliver personalized ads. But people still want to see relevant ads and businesses still want to reach the right customers. Businesses, yes, of course, they want to reach the right customers, but users, who are people, I'm not too sure about relevant ads. Relevant information, of course. Relevant ads, I'm not keen at all. Facebook has optimized everything to such a point that it's kind of creepy in many ways. Not that Google is any better, but for myself, if I touch anything related to child education, the next thing I see on my Facebook feed is enrichment classes, language classes, and I'm sure you're also facing the same thing. You know, different surveys have found different results when they ask people who are using the iOS whether they've opted out of their app tracking. Some surveys have said that 96% have opted out. Some say it's 62%, while some others say it's 75%. Regardless of the real answer, it's unanimous that people are tired of targeted ads. That's why solutions such as Brave Browser, which prevents tracking, are getting popular. The key part is if you are unable to track and unable to produce targeted ads for conversion, then in many ways, isn't it the same like newspaper ads or billboard ads? Maybe I'm exaggerating and I understand that nobody has a better mousetrap than Facebook now, but you get my point. The second key point to note is TikTok is seriously causing Facebook big headaches. It's on the top of Mark Zuckerberg's mind, and why so? If you look at this article, it's mentioned that Facebook is losing touch with the new generation. Teenagers using Facebook app have declined 13% since 2019 and is projected to drop 45% over the next 2 years. Where are they going? Quite obviously, TikTok. Even my mom has sent me TikTok videos before. Now, every business has competition, I get it. But in the social media space, it's about trendiness. It's about mass adoption. And if half my friends are no longer on Facebook, then that platform serves little purpose to me other than having my own videos and having my own photos saved up for a future memory. And that's why Facebook bought Instagram for $1 billion, because they recognize that users, especially the younger ones, are going towards a more photo-focused platform, which is Instagram at that point of time. The problem is this: TikTok is owned by ByteDance. It's China-made. It's not even US-made. They cannot be acquired by Facebook that easily. Which means also, if Facebook had a chance to acquire TikTok, you bet that they would be more than happy to pay top dollar to acquire it. So the best defense that Facebook can come up with is copying. They tried to buy Snapchat back a few years ago. They couldn't. And in the end, they copied Snapchat by doing stories. Right now, what they're doing with Reel on Instagram is to stem the bleeding in popularity because people are migrating towards TikTok, where there are a lot of short-form entertaining videos. But there's a price to pay. Let's read on. On the shift to short-form video, I want to emphasize that while we are going through a transition, we are optimistic. Right now, Reel monetizes at a lower rate than feed and stories, but we expect this to improve over time. The best money maker, obviously on Facebook, is the feed, correct? I'm not even sure if stories make much money, but Instagram Reels, in my opinion, is just to hold audience there on Instagram. there's not many opportunities to place any ad inside. And if the company focuses too much on Instagram Reels, would that lead to a margin compression in future? I guess that's something worth investigating. If we see the latest numbers, you will see that there's something called family of apps. And what I've boxed up over there is a yearly performance profit for family of apps. Family of apps includes Facebook, Instagram, and WhatsApp. If we see year by year, you see that the numbers for profits have grown quite tremendously. That looks good. But again, social media is fickle. Trends can change pretty quickly. That's why we need to dive on to quarterly numbers. In this chart over here, you can see that the quarterly numbers have trended upwards. Fourth quarter is a new advertising revenue high. So what's the problem, you may be asking? That's when we need to deep dive in terms of the percentage growth on a year-to-year comparison. Over here, I've imputed fourth quarter 2021 against fourth quarter 2020. And the percentage number you see over there has peaked out in second quarter 2021. The numbers have declined, correct? From 56% to 33.2% and right now to 20.1% year-on-year growth for that quarter only. And the problem doesn't stop there. If you look at what CFO has articulated, he's mentioned that first quarter 2022, they expect to earn $27 to $29 billion, which represents only a 3 to 11% revenue growth. That's why I have this quick conclusion. The disruptor is getting disrupted and is betting big to stay in the game. That leads to the next point, Metaverse. Facebook branded itself into Meta platforms in an attempt to find a new frontier of growth. I listened to a podcast by Mark Zuckerberg and Gary Vee, and what I learned that yes, as a CEO and as a person setting the company vision, it is extremely useful. It has even helped them recruit the top talent in the Metaverse space. Microsoft, who are keen on their own Metaverse project Mesh, have reportedly lost 100 people to Meta. But my point is this, iPhone when it first came up was cool. It was a new age smartphone. I'm not a big fan of Tesla's valuation, but the car, I've said it before, it's really cool. Wearing a headlamp or headset right now, I don't think so. Maybe it needs time, but the question is how much time is needed for mass adoption. Reality Labs is stepping up big losses, as you can see over here with 3.3 billion registered for the fourth quarter of 2021. And Mark Zuckerberg has actually projected more than 10 billion losses for the year ahead. In conclusion, profits from family of apps seem to be slowing down. The losses from Reality Lab seems to be building upwards. That's why the concerns are real. WhatsApp was acquired for 19 million many years ago, and although it didn't cause losses, its contributions to profits under family of apps are not independently seen even till today. This begs the question, will Reality Labs eventually turn profitable? Nobody knows for sure. But one thing I can guess is that when Facebook builds this metaverse space, they have advertisers in mind. Is that the most cool way to approach it? I'm not so sure about it. Again, the rounding point, disruptor is getting disrupted and right now is betting big to stay in the game. Invest safe as always. Thank you for watching till here. I'll see you in the next video.